Hello, today I'm coming to you from the Atelier in a one bedroom, one bath, deluxe apartment in the Sky. The building offers a complimentary fitness center, continental breakfast, tennis court, basketball court, media lounge and billiards room, a panoramic roof deck, office center, movie theater, fully landscaped terraces, and Wi-Fi in the common areas, along with it being a pet-friendly building with a dog run and a kids playroom. This one bedroom is going for $950,000. Interest rates are now at the highest that they've been in 2 decades, and they don't seem to be going down anytime soon. With the demand of housing still very high and our supply very low. So what can you do as a buyer to adjust to the higher rates? So one of the first and most obvious things that you can do to adapt to the rising interest rates is shop around for rates. Different banks offer different programs, and depending on your credit, where you're buying, you can find favorable rates with incentives depending on where you bank and what programs are available. So now more than ever, it's important to shop around for the best rate, and more seeing banks come out with creative products in order to help gain a competitive edge in this high interest market. And with the rate that you receive being affected by your credit score, now would be a really good time to do everything in your power to help try to increase your credit score. There are many different ways to do this, and you can even hire someone to help boost your credit score, which will help you get a better rate. Something else that you can control in this market is your budget. Maybe you are shopping for your dream home and had certain expectations when the rates were lower, but now that the rates are going up, it may be wise to start with a starter home while we wait for rates to change, or you can build equity in the meantime. So maybe it may just be a matter of looking at a lower budget and maybe reconsidering what you must have in a property. Also, fixer-uppers in this market make sense because you can get a much steeper discount on that type of property. Maybe you don't go for the more renovated home. Maybe you buy something that needs some touches, and you can buy that and renovate it over time while being able to stay below your budget. Another thing to focus on rather than lowering the price is maybe look at the monthlies and examine those a little closer. Sometimes there are buildings or areas with lower taxes or lower common charges, lower operating costs, that in turn can make the cost of the house more affordable. And also, do not be afraid to submit an offer. You never know what a seller's situation is and how much you can get off the price, especially if something's been sitting on the market for a while. It's always worth trying to negotiate in this market. Another option in trying to adjust with interest rates is trying to put more money down if you have it. An IRA is a great place to borrow from. You can take out funds for a home purchase or a rebuild without any penalties. Something else that I've seen is seller financing become more popular in times like this when the rates are high and sellers who want to save, who have a lot of equity in their home, who want to save on capital gains tax, can help by providing seller financing and not paying taxes on an interest-only loan. And the best advice I can give you in this market and adjusting to the rates is do not try to time the market. Their interest rates are variable. They can go up, they can go down. But the one thing that hasn't happened in the history of our housing market is the prices. Prices continuously go up. Yes, we may have some dips due to catastrophic events or what may have you, but the rates of houses keep going up. So the longer you rent, the longer you're holding off on equity that you can be building and tax deductions that you can be saving. And that is all that I have for advice for this high interest market. If you have any questions on rates and the housing market, feel free to reach out. As always, I'm here to help.